Hello traders, Gary Wagner here, just about 11:20 in Honolulu, 5:20 in New York. It is Thursday, 5th day of July, 2018, and this is the Daily Report for Gold and Silver. For the second day in a row, we do have higher pricing in gold, with the most active August contract closing up $5.30 at $12.5880. Of course, we did have a short position which we covered on the open of today's market. We'll talk about that in detail, but the market did open at $12.5350. Silver also showing some nice gains, about 1/3%, gaining almost 5 cents on the day, closing at $16.09. And that was all in light of a weaker U.S. dollar, losing about 1/3% or 29 points, closing again below 95 at 94.11. U.S. equities did gain substantially, with the Dow Jones Industrial Average gaining 181 points, closing at 24,356. And finally, Bitcoin futures giving up about $75 at 65.05. So traders, a nice move in gold over the last couple of days. If we take a look at recent activity, of course, we saw gold pricing fall from grace after stalling just above 1,300 and beginning to track lower. As it tracked lower, it broke through its 50 and 200-day moving average, and we broke through a critical level of support. That was a 78% retracement level. And once it did that, we actually issued a sell signal in the market. We got in roughly at 1261, 1260.80 to be exact. And then initially we put our stops under recent lows. Now, as this market came down, we had talked about our exit strategy and target, which was the number of 1238. 1238 was an important number back then. It is now, because it matched the lows that came in back in December and January of last year, right in here. And so that we felt that there would be a high probability that the market, in fact, would trade and trade down to those points before finding some potential support. That would be a point where we could see a pivot point. Then, as we started the week, this red candle, of course, is representing the day in which gold actually went to 1239. Not quite our numbers, but very, very close. And then, of course, we had the market touch within 80 cents of those numbers, and that being at 1238.80. At that point, we sent out a special trade alert to exit the trade on the open immediately following July 4th, and that is today's candle, the 5th. This is the open right here. So traders effectively went short at 1268, covered positions at 1253, and changed 1253.50 for a profit of $7.30 or $730 per COMEX contract. The question now becomes where from here? Well, my sense is that we have a bounce at a very, very logical point. Now, we've had a substantial sell-off. There's no doubt about that. And we seem to, at least on a short-term or tentative basis, found some sort of support in this area by virtue of the market's move the other day, as well as the move today. Now, we do have a jobs report coming out tomorrow. Of course, minutes were released today, but they came out after the initial COMEX session had closed. We are trading, as I said, effectively higher at 58.50. And depending on how the jobs reports come out, if we see gold continue to pop to higher ground, we will recommend initiating a long position, because that would make sense, and our target would be roughly to about 1280, 1285, and that really is based upon these series of lows that come in here. Other than that, when we look at this sell-off here, there's no clear area where it is, on a technical basis at least, likely to find some resistance. So, for the meantime, we have pulled profits on our trade. we remain flat with no active trades in gold or silver, and we are awaiting tomorrow's jobs report before making a decision as to whether to go long, whether to stay the course and stay flat, or whether even implement yet another short position. We'll see what happens then. For now, we are flat. We have pulled profits. It's been an interesting market scenario to say the least. First, the fact that we have this looming potential trade war. We have tariffs about to be implemented. They have already been proposed, and they're ready to begin as early as the next, say, 12 to 24 hours. And we have not seen gold really act in any safe haven manner, and it has been held back strongly by dollar strength. Now, silver also came under pressure as gold came under pressure. And the key difference as to what we saw was we saw it break below these series of lows that came in throughout February, March, April, and May. However, the lows did not take the market as low as the lows achieved back in December and January of last year, like we saw in gold. Because I had really predicted or believed that if we saw gold hit those numbers, we would probably see silver do the same. We have not. My only explanation for that is the industrial component that exists with silver, platinum, and palladium that would be more supportive as the equities markets, although has been oscillating between positive and negative, for the most part continues to hold ground and continues to slowly advance. My sense, though, is that depending on the jobs report, we will act on silver also, because if we have a scenario in which the jobs report is showing a robust economy, then we could see silver react to the positive, whereas we could see gold react either neutral or to the negative. We'll have to see how all of this unfolds tomorrow. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.